We will get Christian on here and see what he recommended or what he was doing
This is
during.
Christian.
Hey, Christian, it's Joel and Dennis. You are live on Benzinga's pre-market prep, brought to you by MarketFi, and you're well rested over this weekend and ready to do battle again.
Big time. Looking forward to it.
What happened last week, Christian? I mean, obviously we've talked about the flash crash from Monday, but we were just looking at some of those biotech stocks. Could you imagine being able to pick up Gilead under $90 or Celgene way down at $92 there it got to on Monday? Man, these prices were steals on Monday.
Yeah. There was a few that we were keeping an eye on that I liked a lot. One of my I was eyeballing. For me, as a technical analyst, trying to find those price barriers. VRX was one that I liked a lot, and actually had made a trade on that. But so many of those were just if you had the oomph to go ahead and to grab stuff right there at the bottom, you're looking like a champ a week later.
Yeah. Christian.
So you were able to pick up some VRX there on that fall there, Christian?
Yeah, it's one of those things where I always tell everybody that I'm not much of a day trader anymore, as much as I like to swing trade. But when volatility picks up, you start to find things that just look really appealing. You can grab a quick gain. VRX, I really actually kind of liked it at 200, but it happened so quickly, and I was willing to just take a chance there and just kind of catch that falling knife and see what happened. Because I also knew I had the 200-day underneath, maybe give me a little support. But when the stock went back above the 220 mark, that's where I thought, all right, we might have something here where we could go a little higher. So I grabbed it there, grabbed a quick 10 points, and just jumped out.
Okay, so you didn't try and play it on the way down with a limit order, a GTC or something like that? You waited to buy it on strength?
Yeah, I did. I mean, I stared at it. It's one of those things where, I expected lower prices. As you may know, in the Biotech Trader, we've been calling for correction for past couple months because we've been seeing just things weakening underneath the market, which isn't to say, we've been calling for it to happen at a certain time. It's just, you start to see the market deteriorate. So that being said, we expected some rough days if we were right, but you don't really wake up on a Monday and say, hey, I think we're going to be down 1,100 points or so. And so that's one of those times where, as confident as you may be, is it like that. So what I wanted to do is wait and see, because if you go back to 2011, we had some rough days in that last correction where we didn't rally off the bottom, right? I think we had like a 6.5 to 7% one day. We had a 4.5 to 5% another day where we didn't rally back up. So I decided to kind of wait, and that's what I was advising members to do, just kind of wait, see if we start to get a push upward, and then see if you can catch that, that momentum on the upward rise.
Chris S. Tex in the chat here. What's your typical time frame for a swing trade? I mean, I know you had that quick trade on Monday, but typically, what's your time horizon? Targets? What do you do? Give us an idea on your swing trades.
Sure. Typically, when somebody asks me that, I always say couple days, couple weeks, and I don't ever go into a trade expecting a couple weeks. But I always like to say, a good trade will keep me in it.
Yep. So
if things are going the way you want it to, but typically if I get into a trade, I think especially a biotech stock, and I look at, say for example, Kite was a trade, just like flying a kite, K-I-T-E. That was when we talked about, all right, if it got back above 50, you're probably running to 55. That would be that first little move here to there. Well, it did that, but then on Friday it obviously pushed higher. So if somebody had gotten in at 50 and was just only looking at that target, but if you go back and look at, normal environments, you probably may not get the same type of move you got here recently. But it only took a couple days to get to that 55, yet here we are moving higher. So, of course, someone would want to still be in it.
Okay, and just let's go back a little bit here. What about now? I mean, we could talk about last week and said, oh, we should have had our bids out here, this, that, and the other thing. Rip-roaring rally here. But now, Barron's comes out, they're bullish, buy this, buy that, buy the dividend stocks here. What do you think? I mean, are you switching to we're in a bearish market? Is that turned? What are you looking for this week?
Sure. So all last week I spent answering this question, and what I did for everyone, because one of the problems we run into right now is we're very spoiled, like we are generally going into a lot of corrections, right, or bear market. 2007, things were going just fantastic, like 3 years. We never saw anything, a drop of really any kind. And so what I've encouraged everyone to do, and I've been calling it, you want to kind of really look at the anatomy of a correction, whether it be a bear market correction, just a correction, but you want to look at it. So what I've encouraged everyone to do is go back and look at 2011, 2010, 2007, 8, and 9, and kind of look at those corrections. And the one thing that I've asked everyone to notice is the worst part of each one of those corrections happened where? At the beginning, in the middle somewhere, or at the end. And it's always in the middle, right? So my expectation right now, if we only view what's happening in the lens of just let's call it a 15 to 25% type correction, I would think we're going to breach the lows from Monday eventually. But if you look at 2011, it took us 2 months to eventually breach those initial swoon, lows. So it doesn't mean we have to do it this week or the next week. But I would say if you really want to navigate this type of a market as a trader, you want to look at that anatomy of a correction, expect rallies. Don't get suckered into thinking that it means the correction is over. The bear market aspect, I've been asked a lot, and I have just worded it this way. I would say the odds of it have went up. How about that? But when you look at, for example, the biggest thing that I've been talking about for the last couple months that has worried me about the market was if you look at, and just a simple RSI, just simple momentum indicator, look at it on a monthly scale, look at the S&P 500, and you'll notice the S&P is 3 for 3 in forecasting its upcoming sell-offs in the way of momentum divergence. So last time was 2007 and 8 and 9, 57%. Before that was 2001 and 2. Before that was 1998. I think that was around 25%. So although anything can happen and no indicator or signal is ever perfect, I look back and I say, well, we're 3 for 3, first off, of getting something at least 25% or bigger. The thing that probably that next little worrisome sign for me is it also adds a lot of reliability when you start to see your 200-day actually roll over and start to go down. So those are kind of things I'm watching, but I would never be as bold to call the bear market as much as I would say odds seem like they've drastically went up, with not necessarily the price drop, but the technical underlying weaknesses.
So if the odds of the bear market have went up, Christian, are you combing through the charts here and trying to find potential shorts? Because, on a lot of these stocks, we have bounced back a long ways from those Monday lows. And if you think those lows might eventually be tested there again, there's got to be some opportunities from the short side out there, no?
You bet.
What do you got?
One of the things, sure. The first thing for those of people, listeners that may not be familiar with, maybe just looking at trend lines or anything of that sort. Like take, for example, ISIS. And if you look at that on a 2-year chart, what you'll notice is you start back in the May, June area of 2014, draw yourself an uptrending trend line underneath your July low, your beginning of August low, your October lows from 2014. You'll notice this nice little line. So if you take that, you'll notice that then if you zero back in on a 1-year chart, you'll notice that in the beginning of July of this year, the stock broke that support, rallied back up real quick, tested the underside of that trend line, and then continued to fall. The reason why I point that out is take something, for example, like REGN, Romeo Echo Golf November. This is a stock that had a beautiful trend line that you can see if you just pull up a 1-year chart. Like from February through July, this thing's been tested like a dozen different times. Well, notice where this stock is stalling the last 2 days. So it seems as if this stock is rolling back up, even though, take, for example, the IBB or Biotech as a whole had a decent day on Friday, this stock still hit that line, came back down a little bit. So something like that I find somewhat interesting. VRX has a similar line that was tested at the end of April, beginning of July, and 2 weeks into August. Nice 3 points. That's what I like for a trend line. I always say any 2 lines can start a trend line, but for me, a third test and beyond prove its validity to the market. So you look at VRX, that trend line sits around 240. So these are stocks that, could be ripe for the shorting right around those areas.
So VRX, you are out of that now. The long that you picked up there last week, I'm assuming you're out of it if you're looking at it from a short perspective now.
Correct. We grabbed it from 220 to 230. Then I grabbed it again for 230 just for a couple more points because I figured the stock wanted to run up to around the 240 area where that trend line is. But I figured in this market, certainly Mr. Market always deserves the right to change its mind. So I've been grabbing them a little bit more nimble. But if that were to get to the 240 area, I like that for a longer-term play to the downside.
The timing is so tricky on these, especially when you have the VIX up and the volatility up here. How much risk do you give yourself? Let's say you know, hypothetically get a short off at 240. What point would you be cutting this out and saying I'm wrong at 245, at 250? How much, you know, risk are you willing to take on something like this?
Yeah, I would say certainly with volatility, it becomes a challenge because obviously we have to work with the market a little bit. And then there's the intraday, you know, breach versus a close. I'm a huge fan of not getting too worried on intraday, but there comes a point where that intraday turns into obviously we're going to close. So something like, let's say VRX and that line's tested. Let's say it's sitting around, you know, maybe 241-ish at that time, and I wanted to get short there. I probably wouldn't give it too much more of a leash than the 245, 246 type area, because obviously if it gets to that point, I would feel pretty confident that it's going higher, at least back up to the 250 area. You know, and we also have to leave open the possibility. You know how it is. Some people just, you know, have a real tough time, you know, letting the market tell them that they're wrong, right? You know, they hold that view, and as they say, you know, market can stay irrational longer than you can stay solvent, right? I'm a huge fan of that. You do have to recognize there comes a point where maybe the market tells you you're wrong. So if I went short this stock at 241, it got to that point, I have to accept the fact that maybe, you know, the market's telling me I was wrong about my assessment on that trade.
Christian, a look here at a couple biotech stocks in the news. The first one is Intercept Pharmaceuticals, trading up in the pre-market here. Found the announcement of FDA priority review for, you can pronounce this, obeticholic acid for treatment of primary biliary cirrhosis. Any take on ICPT?
Other than, you know, I've never had, you know, it's something I've traded quite often, not for whatever reason, not with the best of luck. I don't know why, but it seems like it always has my number. So it's one of those ones that certainly shooting up to the 200 area.
So we should fade you on this one? Sorry.
Yeah, just mute me on anything I say on Intercept. Seriously, it just had my number. But it's a stock that the last time I was watching, it was back when, in the beginning of August, we had been monitoring around the 232 area. We kind of liked that support. And once it broke, the last I said, well, it looks like we're probably going down from here. Since then, I kind of stayed a little bit away from it. But 200 is a number we probably expect to be a psychological number of importance. 210 is an area I'd be watching. So if someone wanted to get in this and kind of, you know, short that rally, I'd be looking at, I mean, either 200 or 210 is that. But outside of it, you know, I don't really, I try to stay a little bit more away from those pops and drops because they're so difficult to navigate, or they can be at least.
All right, another biotech stock. Nothing like a good rumor of a takeout to get a stock moving. REGN Pharmaceuticals, great day on Friday. Rallies from $6.98 to $9.89. Snuck over the $10 level to $10.07. Didn't remain in double digits for long. Closed at $9.89. We're trading down in the pre-market here. I guess Basalta offer here for REGN. Any take on this stock?
Not really, other than we all joked about how we wish we would have been in it. You know, so, you know, outside of that. But when sometimes people want to kind of jump in and kind of see if they, you know, obviously can get a little bit more. You know, obviously as the news tends to build and such. Maybe if the stock got above 10, you know, you can see the stock maybe starting to drift a little higher and higher. But it's one of those things, again, when these news events come out, I always, you know, it's great if I was in it, but outside of that, I tend to leave it alone and try to, you know, win the race with the singles, doubles. And every once in a while, if you do the right things, you're going to smack one over the fence. But I don't swing for the fences.
Multiple people in the chat asking about Biogen. They want your thoughts here, Colts and David. Both want to know what you think of BIIB. Obviously had the big sell-off with everything on the Monday. Has come back and is actually trading back up above $300 here right now. Thoughts on the big gun BIIB?
Sure. I like the fact that it's back above 300. This is a stock that, you know, if you were to look at my screen and see, you know, whenever I find these levels that I think are key to a stock, of course, I'll put them up there, and it really helps for someone that I'm coaching or training to kind of see what it is I see. And so when Biogen took that nasty drop in July, the funny thing was that the 300 marker, the 320, those were still sitting on my chart. So sure enough, you know, if everyone looks kind of after it chopped around a little bit, for about 2 weeks in the middle of August, you'll see that it kept resisting that same 320, and obviously its low from back in July was the 300. So I like the fact the stock is still holding, or it's back above that 300. I could see it being a nice little trade from 300 to 320 tops, but a push back below 300, I would say, probably sends the stock back down to new lows.
All right, we got to mention the death cross here, S&P death cross, and Dennis is he's panning a little bit, calling it kind of like a lagging indicator. I think I'm kind of in that camp too. But regardless of the matter, it is in the news. It's something that's paid attention to. Is it something that you follow? Put much stock in?
I like the pun. Put my stock in. Yes, I would agree with your caller there, or the person on the email. I would agree completely, because that's something that came up a lot. And I think that when you look at the death cross, it's absolutely right. It's really just confirming what's already happened. And so when we looked at what was concerning us about the market way before any death cross, the number one thing that worried me was after February, March, going into April, we saw the first diverging peak with our RSI momentum. We saw another diverging peak months later, and that's what started to worry us. Dow Jones Transport's in full-blown downtrends, right? Not having hit a new high since November. No other index confirming the NASDAQ's high from back in July. No one. No S&P, no Dow, no Russell, no NYSE, nothing. Back in, I think it was May, advanced decline line not confirming the NYSE's high. The weakening internals of the NASDAQ. These are all things that we're well ahead of. And then price starts to drop. So when you look at the death cross, I think it's great, but it mostly just... that's why when somebody tries to pick it apart, I'm like, well, to pick it apart would almost be to say that somehow there's a perception that that's this mega huge indicator that signals, 50% drops all the time. And I don't know that anybody that understands the death cross actually thinks that. What you said initially to start is absolutely right. It's just more confirming, hey, guess what? Price has already dropped. But it could turn. I think when the 200-day rolls over after a death cross, like go look in 2011 and 2010 and 2007, 8, 9 when you had the death cross, right? On the Dow, the last 3 times you've gotten that, it has led to those 3. But in 2010, the death cross actually, we were at the bottom at that point. The one thing that stands out from those 3 is the one time the 200-day actually rolled over. That was 2007, 8, and 9. So I'd be watching that because it takes a lot of drop to make that happen.
All right, so pull your crystal ball out here, and what are you looking for this week? How are you playing it? Obviously, a little rough start here with the S&P's down 20. What are you looking for this week?
Sure. Well, what I always try to do again is, take the bigger view and then what can happen and what shouldn't happen and so forth and so on. And so when we were calling for that, saying that we think maybe, there's this high potential correction started, we kind of said, okay, what can't happen for us to be correct? Well, we can't hit new highs. So stuff like that. So I look at this correction in the frame of, first off, I do expect to eventually go lower. Second, I do expect that there's rallies along the way. When I look at this particular rally that we're in, I would say if the S&P breaches below 1975-ish, I mean like a significant one, not 1974 or something, but I think we go down 1970 or lower, certainly probably going to swoon lower. I don't know if I'd go as far as to say that means we're going to hit the low right here and now type thing, a new low. But if you look back in 2011, we kind of chop. So right now, directly in front of me, that's the price I'm watching. If we don't do that and we push above Friday's high, then I'm watching the 2025 area on the S&P because that's the bottom of the S&P's prior 4-year channel. Right? Breaking out of that channel, to me, was a big problem. Big problem. So that was more concerning to me than any death cross of any kind. But the underside of that channel sits around 2025 right now. NASDAQ, the 4,900 breakdown point. So if we rally, I'm watching those areas for potential rollovers. But if we come right out of the gates and breach the 1975, 70 area on the S&P, I think we're probably going to go head lower sooner than we would like.
Christian Tharp, biotech expert and the author of the 5-Star Stock Watch, joining us here on Benzinga's Pre-Market Prep. Thanks a lot, Christian. We'll talk to you again soon.
You betcha, guys. Have a great one.
Thanks, Christian.